it's Brian Shannon from alphatrends.net. Today's Saturday, it's the 5th of September, and we just ended one of the worst weeks we've seen in a while here. Last week, as we noted, the NASDAQ was up 7%. This week, we gave back 50% of that or so, and the month to date so far is starting off a little bit weak, but not all is lost here. Let's take a look at the charts. This is a 15-minute chart, meaning each candle represents 15 minutes worth of data. What you'll see on the next few charts is the blue is the volume-weighted average price week to date, and the red is the volume-weighted average price from the high. We also have this orange 5-day moving average, and that's calculated with these 15-minute periods, not on a daily time frame. But as you can see, the average price for the S&P 500 this week was 347.68, putting the average participant on the long side at a loss. The average short is making money. What we see is we're also below a declining 5-day moving average. From an intermediate term perspective, I consider it guilty till proven innocent under that condition. So we need to continue to be cautious heading into next week. Now, looking at the daily time frame, again, not all is lost here. We're still in a major uptrend, and we are holding above the prior level that, of course, people were calling a double top. And we see that we probed below that level and closed right on the 20-day moving average. So again, not all is lost. We've had a massive rally, and some consolidation seems likely. We came down to what is the most relevant trend line as well. If we take this low, it connects right here, and then again at this point. So, cautious heading into next week, but certainly not bearish. Now, the intermediate term time frame is under distribution for now, so we'll wait before we get involved on the long side. At least that's my plan. And as I pointed out on Alpha Trends, I had actually done it with the NASDAQ. So let's take a look at that chart. Let's look at a 30-minute time frame, or actually 65-minute. And what I had pointed out is, the time to get involved is not during a pullback. When you're involved in a pullback itself, you don't know where the bottom is, and it can be very, very scary. You could buy at 290 thinking that's the low, but then we go down to 271, and then you feel terrible about your purchase. So if you take a look instead at the volume-weighted average price from the peak, what we're looking for is for that volume-weighted average price to kind of flatten out, turn higher, and then maybe the market does something like this and holds above that and also above a 5-day moving average. So looking at the NASDAQ in the previous pullbacks, what we would do is put a volume-weighted average price at that point and at this point. And what we look at is once that volume-weighted average price is flattened out and the buyers regain control, and the buyers bring the market back above, that's where we want to get involved long. And then we can set our stop at a reasonable place underneath the most recent relevant high or low. So if we had done that on this one, for instance, right here, getting involved at that point, a stop would have gone underneath here. And you can see that's where the buyers regain control. It tells us the average price from that high is now equal to or greater, so the buyers can regain control as the longer term trend is higher. And we can go back to basically any pullback and see that that's the case. It's not going to get you in at the exact turning point, but what it's going to do is allow you to sit out further weakness and also sideways inactivity of indecision. So again, for the NASDAQ, we came down to some important levels. We can take a look at, for instance, the volume-weighted average price from this low, and we stabilized right in that general area. What you'll notice is the further we get away from an important volume-weighted average price like this, when we do test it, there's going to be a lot more activity around that area. If it's not as extended, you'll see that it often ends up being the exact turning point. So we have a little bit of reason for optimism in that these volume-weighted average price levels from the lows, there's the NASDAQ, and for the S&P 500, this low right here, are holding. And we draw the volume-weighted average price from one low to the next test, and we can see that we're showing signs of at least somewhat stabilization. It's not ready to purchase yet, though, in my opinion. The Russell 2000, this market, I told subscribers to Alpha Trends this week, I gave up on it. It's just been too damn choppy, these false breakouts, and then, and then it comes back down here. It looked like it was breaking out. It came back down, made a lower low, and then, as it did this, I said, I'm not involved. It's just too, the action's too stupid for me, basically, is what I said. And here we are now below that prior band of support. That is also, of course, where we saw the 20-day moving average had been holding. We came down to the 50, and again, I think it's just best leave this alone. Perhaps we come down and test this trend line this week, but I'm kind of done with that market. The semiconductors came down and tested their 50-day moving average. That hasn't occurred since we got back above it here in April. So we've been above that 50-day moving average the whole time, and in fact, above the rising 20-day moving average, except for maybe 1 or 2 days. So I think that, from the way that these markets move, it's most likely a near-term low, but that doesn't mean it's a buy. It doesn't mean it's just going to continue to scream back higher again. And if, the bearish scenario would be is if we get back, if we stay trapped below these volume weighted average price levels and make lower lows and lower highs. Again, I think the theme for next week is a big yellow light. The biotechs continue to be garbage here. As noted, they found supply at that volume-weighted average price from the peak. So, going back to what we just said about the S&P 500, where we would have looked to purchase the biotechs is if they had gotten back above this volume-weighted average price, something like this. And instead of trying to buy these pullbacks and losing our money, I've been saying just leave them alone. Now, you could look at it and say, well, we should have been short, shoulda, coulda, woulda, but the fact is the overall market is in a major uptrend, and I'm not smart enough, I guess, to make every decision exactly right like that. Financials came right up to their declining 200-day moving average, and so far are unable to penetrate that. That's kind of been my target for this group, and you can see, of course, it's still declining, so I consider it on a longer-term basis still guilty till proven innocent. So I think you take your profits in there, basically, and move on. Shares of Apple this week came down to an important volume-weighted average price. Let's look at that on a 65-minute time frame. That is the July pullback low right here. And again, it's not an exact place when we get so far away from it that you're going to see it bounce around that area, whereas early on it might be an exact touch where the buyers come in and find that they are in control. So looking at this, let's just kind of clear it up a little bit on Apple. One, we're below a declining 5-day moving average. I consider that guilty till proven innocent. The volume weighted average price off the peak in here is actually, we're stuck below that. So that's telling us, if you're a day trader, very short-term trader, so far, maybe you got the low. I would say use a volume weighted average price and say, this is the most recent higher low. If you're a short-term trader, set your stop underneath that, because if it fails in this area, I think that Apple could come down and probably, in towards that 50-day moving average or even lower. Maybe we even end up testing the volume weighted average price that's been, stair-stepping higher up and it comes down towards 100. I'm certainly not making that a call, but it's a possibility, and that's what we have to be aware of. What are the possibilities and what are the odds? The odds are right now the sellers remain in control, so why fight it? Let the institutions with the big money try to win those battles, and then we can get involved once the buyers do in fact gain control. But why put your money at risk? If you look at shares of Google, Google came down an important volume weighted average price and tested that, from that late July low, that came down to the area. And maybe we get some further bounce. But again, have a strategy for taking your profits if it starts to, break back down, that you aren't stuck holding the bag. Shares of Beyond, this one's been, I think, frustrated a lot of people. It's still kind of stuck in this range here, but the range has been getting larger, and it's really keeps finding supply right in this area. It looked like this week maybe it was going to get back above that volume weighted average price from the peak, but it still is declining, the volume weighted average price from that peak, and we're unable to close above it. So we had a false move up through it, and these have been some big moves, but the moves are failing, and that's the message of this market, is to stay away because of that. Shares of NVIDIA came down. They closed above their 20-day moving average, but so longer term, the uptrend is still intact. However, we're seeing some aggressive profit taking, which should be expected with a stock that's had a run this size. And again, look at the low from that, the volume weighted average price from that July low and into this area where it found some buyers. So the theme for next week remains the same. We're going to see that the buyers are going to try to defend these levels, and if they don't, then be aware we might be due for another leg lower. We've had a huge run the last few months, and we've got some good year-to-date gains. We've got the election coming up, and that may change people's perception of risk. So just play a little bit stronger defense, I think. Have a good long weekend. I'll talk to you next week.